Welcome everyone to DRJ's webinar series. I'm Bob Arnold, President here at DRJ. We thank you for joining us today and hope you gather some great information from today's webinar. Everyone's phone has been muted and we ask you utilize the question panel you'll find on the right hand side of your screen. Our speakers today will attempt to answer as many of these as possible at the end of today's session. Today's sponsor is Strategic BCP and today's topic is a success story. Elevate business continuity to a strategic level. The agenda today will include the introductions to our speakers here today, some information about Strategic BCP. We'll then jump into the United Bankshares Business Continuity and Disaster Recovery Program success story. We'll then field some questions from our audience, followed by a quick wrap-up at the end. So I'd like to introduce you now to our speakers today, David Underwood and Terrence Lee. David is Vice President and Business Resilience Manager at United Bankshares. He also serves on the West Virginia Bankers Association Task Force of Disaster Recovery. David owns overall responsibility for business resilience for the holding company, including creation and maintenance of risk and vulnerability assessments, business impact analysis, plan creation, as well as business continuity and disaster recovery testing. Terry is the Vice President of Project Strategy for Strategic BCP. He has over 25 years experience in vendor and operational risk management, business continuity, and compliance. With no further introductions, I'd like to welcome and turn the mic over to Terrence.
Thanks, Bob. I appreciate it. And thank you very much for inviting us to be here today. I wanted to speak for just a moment about Strategic BCP, as this kind of sets the stage for what you're going to see in the presentation from David Underwood. Strategic BCP is a software company. We make software for business continuity planning and disaster recovery. And sometimes the urgency and the need for business continuity planning takes a higher level focus within the organization, especially when it involves heavily regulated industries such as banking or healthcare, and especially when there's a time of year event coming such as an audit, and the business continuity manager needs assistance and needs help in preparing and demonstrating their operational resilience to those examiners. That's essentially what happened in this particular case study that we're going to share with you, where our customer, David Underwood, reached out to us for help in preparing for and responding to an urgent situation. You're going to hear that story from David in just a moment. Our company and our software, Resilience One, is ranked as a leader in the Gartner Magic Quadrant. It has many key capabilities for business continuity and disaster recovery, impact analysis, crisis management, but it also has elements that go further into risk management, which we believe is part of the evolving state of business continuity management as the market matures. I'm going to turn it over to David, and we'll get started with his case study. David?
Thanks, Terry and Bob and everyone for joining today, and thank you, Bob, for giving me the opportunity to speak to everyone for a little bit. As Bob mentioned, my name is David Underwood. I am the Vice President and Business Resiliency Manager here at United Bankshares. As you can see on the slide, we are a holding company that operates in 5 states. We are in West Virginia, Maryland, Ohio, Pennsylvania, and the District of Columbia. We are primarily a commercial lending bank, provide a number of other services that you can see on the slide there, and projected this year we will report $20 billion in assets. To get into the story a little bit, we have grown very rapidly here at United Bank. In 2008, when I started, we were roughly $5 billion in assets, and as I just said, this year we plan to report $20 billion. Rapid growth has caused a number of challenges in the BC space. Our growth has mostly been by acquisition. We have acquired, I believe, five banks since 2007 when I started. Anyone that has been in an industry, banking or otherwise, where acquisition drives growth knows that a lot of the leftovers from that is a piecemeal situation, siloed situation, and that's really what caused on the second bullet point here. We had BCP plans. They were mostly Microsoft Word based, not a lot of structure built into them. They were mostly a compliance check mark, which I think a lot of places either are there or have evolved from that situation, at least in the banking world when it comes to business continuity. Our executives here didn't know much about what it was that we needed to be doing, what it was that we should be doing, and what the regulatory expectations were about to be given our growth in size. The last bullet point, and as Terry mentioned, when we reached out to Strategic BCP to help us, with our rapid growth, the greater microscope in the regulatory space came upon business continuity and disaster recovery, and the examiners were less than thrilled, to put it mildly, with our business impact analysis. We tried to model it after the FFIEC guidance. It fell short in a number of areas. So how we sort of turn that around, we advocate internally for effective planning. We implemented Resilience One. It did a wonderful job of tracking not only our business units, but key personnel, critical business systems. Today, we support 31 business continuity plans and also a number of disaster recovery runbooks within the system. It pointed us toward the right questions to ask, the right data to gather, which greatly improved time management skills on my end. And the biggest win for me from where I sit, and I think for the company, is during the onboarding process for the system, key management got to see what kind of information, doing this the right way, doing a business impact analysis the right way, seeing the information derived from that could benefit the company above simply having a business continuity plan in place to please auditors and regulators. So as far as outcomes, as I mentioned, we have 31 plans, formal plans now in place, and that the effect of this for us has meant way more than just a compliance check mark. We have had a number of what I would call minor incidents from a business continuity and disaster recovery aspect. It has greatly improved our organization communication, which is an area that we really struggled in prior to this, with responding to events. While it has pleased our auditors and examiners greatly, it's also pleased our executives even more, being able to show them the true costs of downtime from a specific application or a specific business unit, getting them solid data to make strategic decisions regarding what it would mean to close an office or open a new office. Anything like that has done wonders to leverage their buy-in. And I've had executives call me out of the blue asking questions since we began this project, which would have never been heard of before Strategic BCP, before a formal plan.
David, this is Terry. I wanted to ask you a question on this slide. You're talking about here the number of business units and the formal plans they have in place. Speak, if you will, a little bit to some of the challenges you had with getting the business units on board with following your process for creating plans. We can talk about testing and exercising later on. But in particular, some of the challenges about working with the business units, how that was related to compliance, and in particular, how that reached executive levels within the organization.
Well, I mean, as I mentioned to start, the project in its infancy was driven from compliance. The business units obviously have jobs to do. They're busy, and being in banking, we are heavily regulated. They get bugged a lot, not just by me or by our risk management department, but our compliance and internal audit. So it is at times challenging to get their attention when it comes to things like doing a business impact analysis or creating a business continuity plan. What we tried to do was to show them, first off, the benefit as to, this doesn't have to be that complicated. It doesn't have to take hours upon hours to do. We tried to come up with a simple process to go through, and we tried to spend no more than 3 hours with each business unit to create not just their business impact analysis, but also write their plan and also devise a testing strategy going forward, with the promise that given the new capabilities with the software and me being solely focused on business continuity, up until this project I was also solely responsible for vendor management and information security within the holding company as well. That in the future we were going to automate this, and I promised them that they would spend no more than an hour every year updating their business impact analysis and making any updates to their business continuity plan. And I think they perked up when they saw the level of automation we could create and not having to worry about giving me more time than they had to spare. That answers your question, Terry.
Excellent. Yeah, that's really helpful.
And I think that goes into scaling the program to the rapid expansion. I mean, we're certainly not planning on stopping our growth model anytime soon. And as I mentioned, now the company has moved my focus away from other areas, and they have seen the value of one full-time, at this point, one full-time, and to soon to come more than one full-time employee in the business continuity space. What we learned as a company from this, securing the right internal audience. If you read ISO 22301, it talks a lot about executive buy-in, and while obviously you have to have that to start, what I learned more, it's that middle management, that VP level, department head level person that you need that buy-in for, because at the end of the day, they're the ones that have the information that you need, not just to satisfy regulators, but to actually put together a plan that is going to serve your business. What I've tried to do is, when I visit offices, make sure I pop in and say hi, be their friend on Facebook, take them out to lunch every once in a while. Don't make it seem like a chore, another thing on their agenda to have to deal with is doing this. And in the beginning, I can tell you that it was very frustrating, because it's more than just, at least for us, and every company's culture is probably a little bit different, but at least for us, this was more than just putting in a new piece of software. It was a culture change. Business continuity here was a regulatory checkbox, like we talked about, for the most part. and to change people's perception of something and educate them does not happen overnight. It took a long time to really get their buy-in, and to get to the point where they're calling me with questions and things, and doing things proactively and not retroactively asking, after I've asked them to update their plan or update a BIA. For us, it was strategic BCP, but I would absolutely suggest that every company do their best to align with a trusted partner. And for us, that was more than just a software vendor. Not only do we use strategic BCP for the software that Terry spoke about in the beginning, but we also utilize their consulting arm, which has been an enormous help to us. I don't think we could have done it. We certainly wouldn't be talking about a success story today without the help of Terry and his folks at Strategic BCP. And
David, let me interrupt for 1 second. Before you, I want to make sure we cover this before you move on. I want to take you back to the top point on this slide where you talk about securing the right internal audience. I don't mean to put you on the spot, but this is often one of the most challenging points of an implementation. And I'm curious if you can share with us, can you talk more specifically about the actual roles or titles of the people and how you connected the dots through the organization, such as I worked with a chief risk officer, brought in the chief enterprise architect, or how the path that you took through the senior management hierarchy in particular to really gain that cultural foothold change?
Yeah, I mean, when we started with what we would refer here as our C-suite type people. We had the chief risk officer, who was my boss here in the room, our chief information officer, chief operating officer. And as I mentioned earlier, while obviously you need their buy-in to get time with their people, quickly, once we gave them a little look-see into what we were trying to do and showed them some samples of the kind of information that we could obtain if we do this the right way, we got their buy-in relatively quickly. From there, it was more down to the senior management. And it was really kind of the same thing there, Terry. We showed them what we were going to do, explained to them not only the regulatory burden for us as a banking company to do this, but also what kind of information they would be getting at the end of the day that could help them not just create a business continuity plan, but also give them some instruments for strategic planning to better run their business. At the end of the day, though, it really came down to we got the most useful information and the most buy-in from the people in the trenches that do the job every day. They're the ones that, really helped us. One thing that our business impact analysis fell woefully short on before strategic BCP was mapping interdependencies between business units, which, any guidance or standard you read on business impact analysis, that's a huge part of. And, to talk to them about the work they do, they're the ones that know who they send it to after that, where they get their work from, and having strategic BCP in and helping us and showing us how to use their system and to map those interdependencies between business units was a big value add. for us, and talking to, that's why I said, it's those people that you want to build the biggest relationships with, or at least it was for me, because those are the people that know how to, one, get your plan compliant, and two, get it meaningful and having it be a valuable source to respond to incidents and that occur. I mean, luckily we've never had what I would refer to as a full-on BCP event, but we've certainly had buildings where the power goes out, or network outages, or degraded services from telecom vendors, and challenges that every company faces. And as I said, because of what we learned from that audience and the buy-in that we were able to achieve with them, it's greatly improved our ability to respond to incidents and our overall level of operational resilience. And the last point on the page kind of ties into all that. One of the things that I've taken from this, and one of my favorite things about the business continuity and disaster recovery field is, if you do this the right way and you don't cut corners and just make it a regulatory checkbox, you can really foster change, become, the language here is become a change agent for your organization. We've been able to accumulate a lot of really meaningful data within the system, within our plans, and we have been able to foster real change, not just a compliant BIA, but strategic business decisions from our company have been made off information gathered in the business impact analysis and business continuity process. And before strategic BCP, before the company started placing a greater level of significance on business continuity and disaster recovery, I would have never dreamt that would happen here. That's all I had.
Dave, actually, I'm sorry to interrupt, but I did want to ask you one other point, if you can jump back to your last slide, regarding the role of change agent in the organization. Can you give us an example of how the program operated before versus how you see it operating 2 years from now, sometime in the future? BCM programs often take a few years until they really have an impact on the culture, and not to implement, that's a matter of a week or two, but to actually change the culture of an organization, it takes a while for the processes and the activities to stick, and for sometimes for people to see the value. People who aren't involved in BCM because they've got other jobs, they're just not focused on it. Can you talk to that for a moment before we move on to questions?
Sure. I mean, in the past, especially before strategic BCP was in place, and before the change in the internal structure of having a dedicated business continuity department, for lack of a better word, it was a lot of Word docs going back and forth through email. I didn't have a lot of time to really dig in and review what was in them, let alone try to really test their effectiveness. A lot of non-uniformity in the plans. Now, and we've taken other steps through project management and a few other ways to get BC and DR in front of people. Now when we implement new products, implement new departments, we have formal steps in place to meet with me, create a formal BIA, to we're lucky enough to have a piece of software that's cloud-based, also where provision users from that department, they can go in, make changes to their plan at any time. Now I'm acting more, and I think this is the way it should be from where I sit as the person with the responsibility for this. I'm acting more as the control and not the doer. I'm not a subject matter expert and don't profess to be in very many areas of banking. Our wire transfer manager does a great job. He's the one that knows what we need to do if the system's down or whatnot. And now I can get notified when he makes updates to his plan. I can simply log in, take a look, make sure my internal checklist is covered. And then when we get down and sit down and actually do a fruitful test of that on an annual basis, I can have a level of comfort that the strategies we've put in place from our vulnerability to combat the risks that we've uncovered in our vulnerability assessment are sound. Is that what you were
That's
looking
great,
for?
Dave. Yeah, that's really helpful. Why don't we turn it back over to Bob and move into the Q&A session and take the poll.
Wonderful. If anyone does have any questions here for Terry or David, again, you can utilize the question panel on the right-hand side of your screen. Our first question here today, knowing what you know now, what would you do different?
Call Terry a lot sooner, for one. Two, I think with this and a lot of things I've dealt with in my career at the bank here, me personally, I tend to make things harder than they need to be. One, I joke about calling Terry, but I really can't stress enough what not just purchasing software, but entering into a relationship with a trusted partner has done for us. We tried to do it ourselves. Even after we purchased the software initially, tried to do it ourselves, and you just end up reinventing the wheel or trying to reinvent the wheel when you don't have to. And past strategic BCP, there's resources out there from places like DRJ and others that there's one thing I've seen coming through this process and learned is there's a vast community of really smart people in this industry, and there's a lot of resources out there to use that aren't overly costly and aren't hard to find. And I wish I would have taken the time initially or in the beginning, long before I did, to investigate those and get the use out of those that's readily available.
All right, next question here. David, what's your relationship with the risk management group, reporting relationships and collaboration?
My boss is the chief risk officer for United Bank. I am in the risk management department. Report to the chief risk officer. I also deal quite a bit with our chief technology officer and our chief information security officer. But I am part of our risk management department.
All right. Did you see a significant increase in external oversight as your company went over the $10 billion metric?
Vastly. Before we hit 10 billion, which we did 2 or 3 years ago, we would get our letter from, we're governed by the Federal Reserve Bank, and we would get our IT examination letter, and a lot of times BCP and DR would be 2 or 3 bullet points on a 2-page report. It was, show us your BIA, show us your plans and show us any testing since the last time we've been in. The last BCP, or well, it was the last BCP exam we had, the first one since we crossed the $10 billion threshold. We had a full scope, 3-week business continuity and disaster recovery only IT exam. Which, I mean, the level of scrutiny was nothing like I'd ever seen before.
All right. How do you approach the issues of BCPs for your suppliers and dependencies?
Appendix J. So yeah, I think everybody felt the pain of that to some extent when the FFIEC released that, I believe in February of 2015. We have, as a bank, we outsource a lot of things. First and foremost being our core processing. We have been lucky enough to have been able to participate in disaster recovery exercises with them, I think the last 2 years now. And it's shown us a lot. That opens a lot of eyes when you're looking at that. The days, at least for us, and I'm sure for most banks and other companies, the amount of manual workaround features that existed years ago are just not there. We're so reliant on these companies now, and not only participating, I think Appendix J has done a world of good, at least from what I've seen, not just from these companies extending opportunities for you to participate with them, but the kind of information that you get back from them on their the exercises they hold regarding specific recovery time objectives. And we found instances where we had internal RTOs for products that were, for 4 hours or 8 hours, and then you get results back from some of these technology service providers, and you see that their RTO is 12 hours, and at that point your RTO doesn't mean a whole lot. And we were pretty proactive doing that with when the guidance was updated, and I can tell you that served us quite well in the eyes of the auditors and regulators also. And this is just my opinion, but I believe that will continue to, the level of transparency from these service providers that deal directly with banks or other companies that are in highly regulated industries will do nothing but continue to improve.
All right. Often the stakeholders at the business unit level are being asked to support many enterprise initiatives, especially regarding compliance. Can you talk about the BCM implementation, or how the BCM implementation was received in light of the competing priorities?
Yeah, I think this goes back to what I mentioned earlier. We tried to sell it as, look, we bug you every year for this, along with your getting bugged by numerous other areas in the bank: risk, compliance, internal audit, loan review, whoever else. And the way we tried to do this is, we've got some people here this week to talk to you. Give me 3 hours this week. And the way we did it is we broke it up into 3 one-hour sessions throughout the week. Do the BIA, session 1, do the gathering of, your support components or your, the technology, equipment, that kind of thing you need to do your job every day. 2, and then let's talk about what we would do if the main risks are in our risk assessment came to pass, what we would do in those situations. If you give me these 3 hours this week, I promise you next year we're going to automate this, and it's going to take you less than an hour. And what we found is it takes a lot of places, a lot of departments, 15, 20 minutes. And it was kind of a weird way to sell it, but I can tell you it worked. At least with our people, the promise of automation was was very big in the initial buy-in to get this get the tires kicked on this initiative.
All right. How would you describe the interaction between BCM and compliance? And could you give an example of how BCM has supported compliance at the executive level?
BCM and compliance. So, obviously, there's a lot of compliance issues with business continuity for banks and regulated industry. I work a lot with our chief compliance officer. Our chief compliance officer also reports to our corporate risk manager. I sit in on the compliance committee for our institution. I'm asked a lot of questions in there. I still, not only with business continuity, but with our third parties, we've had to tackle some instances within our compliance department with, say, Reg E that has translated into our into us having to make some updates to our plans and adjusting our recovery strategies because of certain compliance aspects that are compliance issues that the regulators and the government puts on us.
All right, next question here. Do you still have challenges with a few of your business units? If so, which ones seem to be the most challenging? That's a huge question.
That might be a trick.
Yeah, it would be great if everyone was as apt to jump in and get their hands dirty as some. Yes, the short answer is yes. We do still have some issues. As far as for us, it's mostly our lenders and lending department. I wish I could tell you why. I don't have a great answer as to why. I can tell you that no business unit or department in our bank has been completely unwilling to do what we need to do, but we have had to, for some reason with the commercial lenders, they've had to have a little more push than other areas.
All right, I like your idea of adding BCDR to job descriptions. That being said, is BCDR included in their annual performance evals?
Yes, not for every department yet, but we have instituted, especially in our operations department. For us, when we went through our BIA, that's where we found the majority, not all, but a lot of our functions that rated most critical. And I have gotten calls from supervisors of these, what we refer to internally as plan owners, to make sure when they're working on performance evaluations, to make sure that I've been satisfied with their cooperation as far as business continuity goes for that past year. Which I can't tell you how big a shock that, if you would have told me that 2 or 3 years ago, I would have never believed it.
Who defines the RTOs? Is the business unit execs or the people in the trenches?
Kind of a combination. We obviously use strategic BCP to do it, but we never, the way we have it set up, we never ask a business unit what they think their RTO should be. We go through a series of factors, mostly driven by guidance, and a few that are important to our internal executives: financial compliance, legal, reputation, that kind of stuff. Rated over a length of time. And when we're done with that exercise, the system produces an RTO. Now we show that to the business unit. We show the wire transfer guy that hey, your international wires came out with a 2-hour RTO, and we talk about it with them. Is that, we make them, one, understand that we're talking about we're planning for a large-scale event where the whole bank's affected. try to make them understand that we're not just talking about the day that their system's not down, and try to get them to understand the scope of what we're looking at, and if they think that 2 hours is acceptable. And then we'll take that to their boss when we're done, and we'll talk to him about it. And then we have a business continuity and disaster recovery steering committee internally that our CIO and CRO sit on, that they'll get final say, I guess, as to whether or not we want to override or change any RTOs that come out from the system. We make sure those are well documented, and I would suggest anyone that uses a system like that to calculate RTOs, any changes you make to what your framework puts out need to be very well documented, because examiners will be all over that.
All right, do you do annual reviews of your critical vendors? And if so, do you manage that as a part of a business continuity, or is that executed via your vendor management department?
So we have, like I said, up until recently, I was also the vendor management department. We have filled that role with another individual now. I work very closely with him. We do annual reviews of all of our critical TSPs, technology service providers. One part of that, if they're, per our vendor management policy, if that vendor is required to keep a business continuity and disaster recovery plan on file, he will send that to me every year. If it's not a vendor that I deal with or that we do testing with, I will review the plan, any testing that goes through. And if I have any issues, we'll get back with the vendor. That also goes through our BCP and DR steering committee, as well as our vendor management committee internally. So yes, we do keep very close tabs on our vendor, not only because of the regulatory burden to do so, but as I mentioned earlier, we're so heavily reliant on a handful of these guys that we have to.
Got a couple questions came in about your BCDR steering committee. Someone asked, please tell us more about the role of this committee.
It's pretty new. So I would say the role is still in process a little bit. But, as I said earlier, I'm not a subject matter expert in a lot of these areas. So what we try to do is get management level folks from 9 or 10 different key areas of the bank, and have a forum, an organized forum, to put the information that we're gathering in front of them, teach them about, because some of them don't it's not their job to understand what a BIA is or even what an RTO is. So to one, it helps with our education, training, and awareness. And two, it's a formal setting to make decisions. As I said, our CIO sits on it, our chief risk officer sits on it. So if we uncover gaps between RTOs and what our technology, what our IT team can, if my wire guy's telling me he needs a system up in 2 hours, and my IT guy's telling me I can't do it in any less than 4 hours. The committee so far has been a great way to bring issues like that in front of senior level management who have the authority to make decisions about that. So, in that case, they can say, we're going to upgrade our technology, or we're going to change the RTO, or we're going to accept the risk. And that's a huge benefit for me, because then I have it in writing that they accepted the risk, and they're not calling and yelling at me if something, God forbid, happens one day and we didn't get the system up and running on time.
All right, since it was mentioned that you have a hands-off process exist, does an in-house certification program exist?
Yes. there is if I'm understanding what they mean by certification process, they do certify every year. There's another form that goes out that they fill out, one being that they've looked at their plan, are comfortable with their plan, that it, to the best of their knowledge, is up to date, and to aid in the training and awareness aspect, it also asks them to certify that they have gone over the plan with any employees that they have, and that the employees know their responsibilities with the plan. And I keep those on file in my office here.
All right. As part of an external oversight and scrutiny, were you tasked by examiners with having staff members operate from alternative or secondary work locations?
Yeah, we were actually. The way we're set up, not to get too technical about where we are, we have two data centers, two operations in data centers that support our infrastructure. And while they didn't tell us we had to, we use an office about an hour and a half away from each of those as our document and DR site. And the question came up about bandwidth and load balancing and some of the technical aspects of relocating, say, 50 to 100 people to a new building. And they, as I said, they didn't tell us we had to do it, but they strongly encouraged us to have a more full-scale approach to our testing and not just bring a business unit up at a time when that could potentially not uncover some risk that could be brought on by bringing 50 or 100 people. And so yes, that did come up from the regulatory side.
All right, final question. And if we did not get to your question here today, our presenters will have access to these questions, and we'll follow up with every one of you after the webinar's ended. We have some incredible volume of great questions coming in here too. So, final question of the day. Currently, senior leadership at my org doesn't see any real value in conducting BIAs. What specific points of value did you use to sell your organization the importance of conducting BIAs?
So, I mean, we're a for-profit institution. We're here to make, first and foremost, to make money, and second of all, to support shareholders and make our regulators happy. So for us, at least the way I sold it and found the most success with my senior management, was cost of downtime. So it wasn't just, sometimes, at least with my executives, what I found is obviously they know it's bad if if we can't originate ACHs or can't send or receive wires. But when we really put it on paper and showed them that the risk is real, one, with our threat assessment, that something could happen. We have a very large presence in the Washington, D.C. area. So, you've got issues and risks like terrorism and all kinds of other things that are real. And that when they saw, if we can't send international wires or domestic wires for 2 days, and they saw the actual numbers in black and white of what it could cost us, that to me was the biggest selling point.
Great.
For at least.
Oh, go ahead. Finish up, David. Sorry.
No, I'm done, Bob.
Perfect. Well, again, if we did not get to your question here today, David and Terry will have access to these questions, and we'll follow up with you directly afterwards. So any parting words here, David or Terry?
I mean, I think my email address will pop up here in a second, and if anyone has any questions or ideas they want to share, I'd be more than happy to talk to anybody offline about this, BCP in general.
All right.
Thanks, Dave. This is Terry. I wanted to just add, I thought the questions were great. And there are a few additional ones, as Bob mentioned, that we'll follow up with directly when we're finished. I think Davey did a great job of talking about how the program did elevate to the senior level executives in the organization, and in particular, how you went through what I think everybody would agree is a big challenge in business continuity management. That challenge being really impacting the culture and adding value across the board. But thanks very much.
And David, could you advance to the final slide to?
Yes, sir.
And Terry, if you want to wrap us up here.
Excellent. Yeah, I will. Thanks very much, Bob. First, thanks to DRJ. They are definitely one of the best partners in this industry. If you have not been to their events in the fall and the spring, they are outstanding. We really appreciate their support and involving us in this type of a webinar. You can reach David Underwood directly at the bank or myself at Strategic BCP at the email addresses listed on the slide. We have additional case study information as well as the full United Bankshare case study report, which is on our website. There's additional information about our software and about our consulting services practice, of course, on our company website. You can hit the Contact Me page if you're not quite sure what you're interested in, but you just want to talk about your program, and we'll be happy to set up a call with you. There is an additional webinar coming on June 14th. It's co-sponsored with our business partner, our technology business partner, Everbridge, and it's on the topic of integrating business continuity and crisis communications. It's featuring a joint customer who we work with together with Everbridge, an insurance company in New York City called Ironshore Insurance. You can visit our events page at the URL on the screen and register for that webinar. We hope you'll take the time to join us. Thanks everybody for participating. I know there's a lot of people on the webinar whom are people who've been expressing interest in the product, people like Kendra and people across the market. So we appreciate you taking the time out of your busy days to learn more about this important topic. Thanks, Bob.
Wonderful. Thanks again, everyone, for their attendance here today. We again hope you gather some great information from today's webinar. DRJ would also like to thank David and Terry for their time here today, as well as Strategic BCP for sponsoring today's webinar. Strategic BCP will be emailing everyone a link to the recording of the webinar. You may view it as frequently as you wish or share it with your peers. If you do have any additional questions, please contact Disaster Recovery Journal. Thanks again, and this now ends today's webinar.